Gold and silver investors need to pay attention right now because the precious metals market may be approaching another major breakout. Gold has pushed toward $4,600. Silver is approaching $70, and one of the biggest potential catalysts for the next move is getting closer: the Federal Reserve and its upcoming policy signal at Jackson Hole. The question is no longer whether gold and silver are in a strong trend. The bigger question is how far this trend can continue. And if the Federal Reserve gives markets the signal precious metals are waiting for, we could see another powerful leg higher, a move that puts $5,000 gold and $80 silver directly into focus. Here's why this setup is becoming so interesting. Gold recently pushed to approximately $4,601, while silver moved towards $69.48. Gold has also moved above major technical reference points, including its 200-day moving average. That matters because technical breakouts can attract a completely different type of market participation. When a market moves above a major resistance level and holds there, traders begin looking for the next level rather than the previous one. And for gold, that next major psychological target is becoming increasingly obvious: $5,000. For silver, the key level is $80. But before we get there, we need to understand what is driving the current move. And one of the biggest factors is monetary policy. The Federal Reserve's Jackson Hole Economic Policy Symposium is scheduled for August 27th through August 29th, with Fed Chair Kevin Warsh expected to deliver his major speech on August 28th. Investors will be watching closely for clues about interest rates, inflation, liquidity, and the future direction of monetary policy, and that matters enormously for gold and silver. Why? Because precious metals are highly sensitive to changes in interest rate expectations, real yields, and the US dollar. If markets begin expecting easier monetary conditions, the environment can become increasingly supportive for gold, and if the dollar weakens at the same time, that can provide another source of upward pressure. We've already seen the dollar move toward a 3-month low. That is important because gold and silver are priced in dollars. When the dollar weakens, these metals can become more attractive to international buyers. So right now, several important forces are beginning to point in the same direction. Gold is breaking higher, silver is gaining momentum, the dollar is under pressure, and the Federal Reserve is approaching a major policy event. That creates the potential for a very interesting setup. Let's start with gold. Gold has already demonstrated that it can attract enormous amounts of capital when investors become concerned about inflation, government debt, geopolitical uncertainty, monetary policy, and currency stability. And those themes remain important. The U.S. fiscal situation continues to receive significant attention. Government debt remains enormous. Treasury yields remain an important variable for investors, and financial markets are increasingly focused on what monetary policy could look like during the next phase of the economic cycle. Gold doesn't need one single reason to move higher. It can benefit from several forces at the same time. And when those forces begin reinforcing each other, momentum can accelerate quickly. This is exactly what makes the current gold setup so interesting. Gold has already moved above $4,500. It has tested approximately $4,600. Now investors are asking whether the next major destination could be $5,000, and the distance is actually smaller than it sounds. From around $4,600 to $5,000 is roughly a 9% move. That is a meaningful increase, but during a strong precious metals momentum cycle, it is certainly achievable. The market doesn't need gold to double. It doesn't need some extraordinary event. It simply needs another sustained leg higher. And a shift in monetary expectations could provide exactly that. Now let's look at silver. Silver may be even more interesting from a momentum perspective. Silver has both monetary and industrial characteristics. It is used in electronics, electrical systems, solar technology, and other industrial applications. That gives silver an additional source of potential demand beyond its role as a precious metal. And historically, when precious metals enter strong bullish phases, silver can sometimes outperform gold on a percentage basis. That's why the move towards $70 deserves so much attention. Silver is already approaching that level. Once the market begins accepting $70 as a new price area rather than a ceiling, investors could quickly start focusing on the next major target, and that target is $80. From $70 to $80 is approximately a 14% move. Again, that is significant. But silver is capable of much larger percentage moves than gold when momentum accelerates. And if gold continues pushing higher, silver could attract additional capital from investors looking for greater upside. This creates an important relationship between the two metals. Gold can lead, silver can follow. And once silver begins outperforming, the entire precious metals sector can receive increased attention. That's why the combination of $5,000 gold and $80 silver is so interesting. Now let's bring central bank demand into the picture. One of the most important long-term factors supporting gold is continued official sector demand. Central banks have increasingly viewed gold as a strategic reserve asset that is very different from short-term speculative buying. A trader can buy gold today and sell it tomorrow. Central banks can accumulate gold with a long-term objective. That creates a structural layer of demand underneath the market. And when central bank demand combines with investment demand, monetary uncertainty, and a weaker dollar, gold can develop a powerful foundation. This is one reason the current rally deserves attention. The move isn't happening in isolation. There are multiple sources of demand behind the broader precious metal story. And then we have the Federal Reserve. This may be the most important near-term catalyst. Imagine the Fed delivers a message that markets interpret as more supportive of easier monetary conditions. Interest rate expectations shift. The dollar weakens further. Real yields become more favorable for gold. Investors increase precious metals exposure, and gold breaks through another resistance level. That could create a feedback loop. Higher prices attract momentum. Momentum attracts more buyers. More buyers push prices higher, and higher prices bring even more attention to the sector. That's how major trends can accelerate, and the technical picture could play an important role. Gold has already moved above the $4,500 area. Now the market is watching what happens around $4,600. If gold can hold these elevated levels and continue making higher highs, the market could begin treating $4,600 as another support area rather than a resistance ceiling. Then attention can shift toward $4,700, then $4,800, and eventually $5,000. Markets rarely move in a straight line, but major psychological levels often become increasingly important once momentum builds. Silver could follow a similar path. First, $70, then $75, and eventually $80. The key is that silver is already close enough to $70 for the target to become a realistic discussion. It isn't some distant price sitting far above the current market. The market is already approaching it. Now let's return to Jackson Hole. The symposium begins on August 27th and continues through August 29th. Fed Chair. Kevin Warsh's speech on August 28th will be closely watched for clues about the future direction of monetary policy. For precious metals investors, the important thing isn't necessarily one specific word. It's the overall message. Does the Fed sound more comfortable with easing? Does it suggest inflation is becoming less restrictive? Does the language indicate that financial conditions could become more supportive? Any signal that changes market expectations could have an immediate impact on the dollar, Treasury yields, and precious metals. And this is where the bullish thesis becomes very simple. If the Fed becomes more supportive of easier policy, gold can benefit. If the dollar weakens, gold and silver can benefit. If investors become more concerned about government debt and fiscal pressure, gold can benefit. If uncertainty remains elevated, safe haven demand can benefit gold. And if technical momentum continues, traders can add another layer of buying pressure. The metals don't need one perfect catalyst. They simply need several supportive forces to continue working together. And that's exactly what investors should watch over the next several sessions. Now consider the potential scenario. Gold breaks decisively above $4,600. Silver breaks above $70. The dollar continues weakening. The Fed delivers a supportive message. Treasury yields move in a direction that favors precious metals. Institutional investors increase exposure. Momentum traders enter. Suddenly, the market isn't asking whether gold can reach $5,000. It is asking how quickly it can happen. And silver could become even more explosive. If silver establishes itself above $70, investors may begin looking towards $75 and then $80. This is why the next move in silver could potentially be much larger in percentage terms than the next move in gold. Gold has the monetary advantage. Silver has monetary demand plus industrial demand, and both can benefit from a weaker dollar and changing monetary expectations. There is also another important factor to consider. Gold and silver are increasingly becoming part of a broader global capital allocation story. When investors become concerned about currencies, debt, inflation, interest rates, or financial stability, precious metals can become more attractive. That doesn't mean every investor suddenly abandons stocks and bonds. It simply means that more capital can be allocated toward hard assets. And when that happens during a period of strong technical momentum, the effect can become significant. That's why the current move deserves more attention than a normal daily rally. Gold is already near record territory. Silver is approaching a major psychological level. The dollar is under pressure. The Fed is approaching Jackson Hole, and investors are watching monetary policy for the next major signal. This creates the potential for another leg higher. Now here's the most important thing to understand. The $5,000 gold target doesn't require gold to make an extraordinary move from here. It requires continuation of the trend, continuation of investor demand, continuation of central bank accumulation, continuation of monetary uncertainty, and potentially a more supportive Federal Reserve. The same applies to silver. $80 doesn't require silver to double. It requires another strong move from an already elevated level. If silver clears $70 and momentum accelerates, the distance toward $80 becomes much easier to imagine. And once markets start believing that $80 is achievable, price can move faster than expected. That's how psychological targets work. They become self-reinforcing when enough market participants begin watching the same level. So what should investors watch now? Watch gold around $4,600. Watch whether it can hold above the recent breakout zone. Watch silver around $70. Watch the US dollar. Watch Treasury yields. And most importantly, watch the Federal Reserve's message at Jackson Hole. Because the next major move may not come from a new geopolitical crisis or a surprise economic report. It could simply come from a change in expectations. And markets move on expectations. If investors begin believing that monetary policy will become more supportive, gold and silver could receive another powerful boost. And if that happens while both metals are already sitting near major technical breakout levels, the reaction could be much larger. That's the setup. Gold is approaching $4,600. Silver is approaching $70. The dollar is weakening. Central bank demand remains important. And the Federal Reserve is about to give markets another major policy signal. Put those pieces together and you get a very clear bullish scenario. Gold toward $5,000, silver toward $80. But the bigger story isn't just those two numbers. The bigger story is whether precious metals are entering another phase of acceleration. Because if gold continues breaking higher, silver could continue catching up. If the dollar continues weakening, the metals could gain additional support. If monetary expectations become more favorable, investors could increase exposure. And if momentum continues, the market could begin targeting levels that seemed unrealistic only months ago. That's why the next few sessions matter. Gold has already shown strength. Silver has already shown momentum. Now investors are waiting for the next catalyst, and the Federal Reserve could provide it. So the question isn't simply, can gold reach $5,000? The more interesting question is, what happens if the Fed gives gold and silver exactly the catalyst they need? Because if the dollar continues weakening, if monetary expectations become more supportive, if gold holds above its breakout levels, if silver clears $70, and if investor demand continues building, then $5,000 gold and $80 silver could become much more than attention-grabbing targets. They could become the next major milestones of this precious metals cycle. And that is why investors should be watching the Fed, the dollar, Treasury yields, and the price action in gold and silver very closely. The breakout is already underway. The next catalyst is approaching, and the targets are becoming clear. Gold, $5,000, silver, $80. The precious metals market may be entering its next major phase. And if the Federal Reserve delivers the signal investors are waiting for, the next move could be the one that catches the market completely off guard.